Hey, welcome everybody. FOMC is coming, and I'm here with JR Romero's hat. No, actually, he's put his head up so I can see him. My name is Michael Camo. I'm director of content for T3 Live, and of course, I'm here again with my good friend JR Romero, who's going to tell me all the exciting stuff that's going on in the universe. We're going to talk about Fed Week, CPI, Oracle, Nvidia, gold, silver, cannabis, semiconductors, and anything else. So let us know where in the chat you are watching from. And if you want to join JR's open house, go to t3live.com/gojr. There's links in the description below. And also, very, very fun news. If you want to learn about JR's upcoming mentorships, there's links down in the description below. You can put your information in to go on a waiting list. So if you want to make JR your personal trading god, go and click the link below. And of course, our good friend Itz is from in here from Richfield, Connecticut. So JR, how's the market treating you today?
Pretty well. I haven't been doing much, honestly. I've just been watching the market consolidate, go sideways, handling some positions that we've had for a while. So I'm managing positions, calling out. We called out some nice day trades for our traders in the room this morning. It's been a very, very active week. Just those weeks where you feel like the dude with the flamethrower landing on Saipan. You know what I'm saying? This week felt like that every day. Just nonstop mayhem, drastic moves, crazy volatility. We've just been going, full flamethrower all week. So it's nice to have a slower day. We've had some really, really big successful trades all week. So, today's been more of an administrative day, trimming gains, getting ready for the weekend.
So, are you the guy with the flamethrower, or are you the guy getting burned?
No. I'm the guy with the flamethrower. Yeah, what the hell's wrong with you?
I don't know. It's it could go either way. If we were talking,
when you're aggro and you're just trying to smoke them out of their holes. That's been this week for me. Just totally wild and aggro.
All right. Well, okay. So next week, obviously, big week coming with the Fed. It looks like market's pricing in 87% probability of a rate cut. Now, do you think everybody wants like a dovish outlook for the future? I don't even know if that's a dumb question, but is it like, is everybody desperate to hear kind of like all systems go from Powell?
Everyone is desperate to hear all systems go from Powell. The issue is that you have many different crosswinds, some of which are structurally suspect at this point, that are causing great concerns, especially in the bond market, related to the liquidity, and some geopolitical concerns also that I feel like are beyond the Fed's purview to address. And so I don't think that the Fed doing what it's expected to do this week is really going to have much of an effect in the market whatsoever.
Okay, so what are, just so people understand, because obviously I'm an expert, so I know, but so for everybody else out there, like, what are these external forces? I know you've talked about the state of the yen carry trade. What are these forces that are beyond the Fed?
Right. So you called that one right. So the Japanese 2 and 10 year yields, 2 and 10 year bond yields are at their highest since 2007. Right, making a big mess in terms of the carry trade. Right, the carry trade, which has basically depended on 0% borrowing for decades now, is under very serious threat. It's about $30 trillion worth of business that American funds and institutions do with Japan every year. It's not a small amount, and it's certainly a threat to a major liquidity source. And liquidity really is one of the key words here. Also, the Fed, the overnight repo market's been has been in chaos as of late. Liquidity's been drying up. The Fed had to pump $3.5 billion into the overnight repo markets just to keep them going in the past week or so. So there's concerns all around, and I think the market's looking past this meeting. Honestly, it's not correct to call Powell a lame duck because we don't have a successor yet, but he is on the way out.
Okay, now do you think, do you at least U.S. equity markets are not pricing these things in because I mean I know I've been hearing about some of these macro things for months, if not years. So like, are they really like shocks? Like,
I think they could be. Everyone ignores it. It's not a big deal until it becomes a big deal. So we shall see. But ultimately, the markets look like they're trending higher. Economic data hasn't been disastrous. We're not yet on the verge of a recession, like many people are saying. Did you see the jobless claims this morning?
I did not. I was too lazy.
So they were much lower than expected. So overall, what I'm trying to say is, so far we're in crisis averted mode, but there are some serious concerns the market has, and I think it's as you mount the wall of worry in the S&P 500, these are the concerns du jour or du month. For the past month we've been really worried about the potential effects of the carry trade and the liquidity, and also the private equity markets and private debt in this country. You could have a real unraveling of that. So that's been the theme, and I think the market's really going to be looking past the Fed decision. It's assuming that it's going to give us a cut, and it's going to be looking past that. I'm bullish into the end of the year. I think we're going to get a nice run, 7,100, maybe 7,200. But you know how this market is. It's a little psychotic, to say the least.
Yeah, I think that's a good way of putting it. Okay, what about the state of the tech trade? I was actually wondering if you had any thoughts on Oracle specifically, because it seems like the market singled out Oracle and just said, let's beat the hell out of this thing. Like as soon as they had all that good news, and then all of a sudden everybody's focusing on the debt, the CDS prices, people questioning whether all the stuff with OpenAI is real. And incidentally, they report on Wednesday, so like right after the Fed, Oracle hits. Do you have any thoughts on Oracle and how it could impact the AI trade?
Well, it's not for no reason, right? Barclays and Morgan Stanley came out and highlighted their debt risk indicator reached like multi-year highs. They ramped up so much borrowing to fund their data center projects without a clear measuring stick as to what the outcome of that OPEX would be. And I think it freaked a lot of people out. In terms of cash flow projections, Barclays said that, I believe they said they could turn negative in 2026 and 2027. I mean, for a company like Oracle, that's a disaster. So, it's I understand where the analysts are coming from, and they're basically saying Oracle's going to need to raise cash soon to continue to fund operations. So that's for a stock that's up 41% month to date and is a storied and solidly run company. These are drastically irresponsible moves they've made. So I understand why the market is punishing them. No.
I mean, it's funny when I saw those firms defending it, I was like, did they not get a piece of any of these like bond deals or something?
Yeah.
Because it's like when there, when there's a financial incentive to look the other way, most people will look the other way. Okay, so do you have any? I don't want to keep you too long, Jr. So
No,
do
it's
you
all
have any?
good.
Do you have any names you're eyeing specifically for next week? Like, are there any particular things you're looking to do?
Yeah, let me pull up a chart here. Hold on one second.
No problem. And folks, if you want to join JR's open house, go to t3live.com/JR. There's a link down in the description below. JR's going to bring up some of the most beautiful, gorgeous charts I've ever seen in my life. He does all the fancy ones, the ones I like. It's like he's bringing me flowers. That's how I feel when JR brings me charts. He
Oh,
makes me feel special.
you're such a hopeless romantic.
I thought
I
you were going to
like
call me
it.
a hoe.
Not on camera, son. All right.
Monster beverage. What is this nonsense?
This is one of our positions.
Really?
Yeah, man. We entered MNST right at the edge of the triangle. The wedge. Right here. 71. We've been riding the choo-choo train ever since. It's good. It's a good trade. All right, so let's see. Let's watch our watch list here. So we just went long Shopify. I think this one, a little bit of a false breakout today, but it's above all the moving averages. I'm expecting this one to go for at least a 20-point move. EQT, not impressed with, but JFrog. So JFrog, we just bought it yesterday. We added today through 62.94. This is a beautiful ascending triangle here. And I'm looking, stop drawing on my screen. And I'm looking for this FROG to make a very strong impulse move into 73 and a quarter, $80, like quickly. We also just bought TSM through 292.85. We're looking for 311 and 330 in the next couple of weeks. Liquidity, we just bought this one again right here at $30, up to 34 already. My target's 40, so we're halfway there. But this one has a ton of room to go. We just bought Apache 2 days ago. This was going for a ride, guys. We bought it here at the 25.83. Inside bar triggered today already. And I'm looking for 31.14 and 35.90. Caterpillar, this is almost the end of the road. Look at that, Michael. We're about to hit our 620 target. Very pretty, right? You got to admit when these.
I was literally just Googling the first time we talked about Caterpillar before the FOMC. It was like it was 450. So yeah, so Caterpillar 620 still on track.
Yeah, we're 14 points away. It's a beautiful thing. All right, I'm going to be buying TMQ in the next couple of days. This looks great for a move to 658. INBX sets up Monday for an inside bar breakout, 89.43. I will be buying this then. GSAT, man, I missed this one. We had a decline topside break here at 60 and just went already without me. TRVI needs to make some more. SMTC Doji Sandwich on Monday, 80.71. Be there, be square, kids. It's also Doji Sandwich through a prior double top, so extra champagne cork bottle type of vibe. Prax, we had it on the watch list. It gapped up without us. Son of a gun. Let's take a look here. Holdings not ready. Sorry, not ready. Amgen not ready. VIAV just triggered today. It's a little bit of an inverse head and shoulders break through 18. I'm looking for 27.50, potentially maybe even $50 on this one. It just broke out today. This one looks fantastic. VIAV looks great. ORKA looking for the break of 33. for a move to 61. Looks phenomenal. So rounding bottom base off the gap down. It looks great. NEMS, not ready. Paymentos, 40.43 break, looking for $72. 11 never went this week. IXC. So I bought Global Energy. I have become very bullish on energy and crude. I bought IXC yesterday for the long-term portfolio. I believe we're going to see a big move in crude and the energy sector in general.
Okay, that your view on energy specifically, because people are starting to talking about energy. Is there like fundamental cases you're leasing for, or is it technical? Like, why do you think oil is going up?
It's a little bit of both. I think we're going to see massive disruptions from the Russia-Ukraine scandal. I think that Europe is going to start to buy a lot more American liquefied natural gas and crude. And I think that we're going to see the energy sector have a whole lot more demand. I think our economy is going to start growing like gangbusters. So all those factors, I think, lead to crude and nat gas going higher.
Okay, and you think IXC is just the easiest way to fight it?
I think what?
Like, and do you think IXC is just the best way to play it rather than have individual?
IXC and XLE are the ways I'd like to play. IXC is a long-term one. XLE would be the short-term portfolio. Now, I'm already front-running that move, also playing Apache, right? So Apache, we bought right here through the green line at the 2580, had a resting bar, an outside bar for an inside bar breakout. And this trade, it's 3 days old. It's probably up 8-9%, 7%. Not bad for a couple of days worth of hold. So, yeah, we're also in Apache, and it's the same idea, right? The same theory for Apache there.
It's interesting because I was wondering if there could be any catalyst for the oil service stocks, because I know it's extractively like their capex and the oil and the upstream everything's just pulling back. So I was actually wondering if one, and maybe that's it. If there's more demand coming from Europe, maybe it's all of a sudden at least all the service companies can't really start paying out.
Well, I think Europe has got to completely decouple from. They have to decouple from their, especially Germany, from their dependence on Russian oil and that gas. And I think America is going to be a major victor in that fight.
Yeah,
a beneficiary.
In Germany specifically, even real disasters with alternative energy.
Yeah, I mean, Germany cannot fuel its industrial plant with green energy alone. Number one, and number two, they would take them a long time on solar to really be able to fuel an industrial plant of that size. So they don't really have a choice. They have to go with nat gas and petroleum, and they've now decided that they're going to exclude Putin from the gas station of the world award. And so I see the United States as a basic beneficiary of that decision.
Who would have thought Germany wouldn't be so impactful of all the countries in the world, being so impactful on something so basic, so focused?
Right?
I mean, maybe once every 70, 80, 90 years, Germany makes some bad decisions. We'll just leave it at that. Okay, guys. If you want to join JR's open house, go to t3live.com/go, and we will see you all next week. JR, have a perfect weekend.